So the big breaking news in today's video is really about the fact that the Federal Reserve has recently announced that they will be cutting interest rates once again by 0.25%. But the even bigger breaking news to share is the fact, and this is the part that really came as a massive surprise for a lot of people, is that originally what they were going to do is that they had plans to try to cut interest rates 4 times in 2025. And however, now they have made a lot of hints and have basically suggested that instead of cutting interest rates 4 times in 2025, they will actually be ending 2 of the rate cuts and instead only be cutting interest rates 2 times in 2025, postponing the other 2 interest rate cuts that they were going to do into 2026. And depending on how the economy performs and inflation and everything that's been going on in our country today, it's going to dictate whether or not they're going to increase it even further or decrease the number of times that they're going to be doing interest rate cuts. So the big idea is that in today's video, what I really want to talk about is really reviewing what's going on with the FOMC meeting that recently just happened. I want to talk about the significance about what this actually physically means for us, how this is going to impact the stock market, the housing market, and also maybe just talking about what this is going to do for Trump, specifically because Trump is going to be the new incoming president coming in January of 2025. So that being said, let's just get right to this video. But as always, like, comment, subscribe, and let's get started. So like just mentioned, the idea really is that they're only going to be doing 2 more interest rate cuts in 2025, at least according to what they have planned right now, because they're going to be constantly changing things left and right, just like how they recently changed it from 4 interest rate cuts into 2 interest rate cuts in 2025. The projection right now is that in January of 2025, in their next FOMC meeting, what they're going to do is that they're going to reevaluate the economy once again and see what the inflation situation is like. Depending on what inflation is currently like or is going to be like in January of 2025 is going to dictate whether or not they end up changing this again and maybe spiking it up into 3 interest rate cuts, or maybe even dropping it down to 1 interest rate cuts, or maybe even ending the rate cuts altogether and now instead doing it in 2026 instead. Of course, all of this stuff, we don't really know what's going on because this is the future and we don't know what the future holds. So with that being said, maybe consider subscribing if you guys are brand new here, because we will be making more videos as we get more updates about the situation. But to really maybe cover now, talking more about what went on in the recent FOMC meeting, is that at the recent FOMC meeting, what they really ended up doing, like just mentioned, is that they cut interest rates by 0.25%. But what it also did is that we also received news that the cuts are now, they reduced the borrowing rate to a target of 4.25 to 4.5%, back to the levels that it was in December of 2022. And the importance about this is what I really want to show is, maybe if you wanted to take a look at this graph that's shown on the screen right now, and what this really shows is that the target rates over the last several years, focus especially on the later part from 2020 to present day right now. As you can see from this graph, what it really shows is that the interest rates at one point were really, really low and flat. And I mean, we all lived through that era, so we all know what's been going on during that time period. During the stimulus era, when the pandemic was going on, we had really low interest rates because they were trying to solve the economy situation, the economics problems that were going on during the pandemic. Huge shout out if you guys have been here on this channel since then, because you guys are the real supporters of this channel. But the idea really is that towards the very, very end of 2022 and then throughout 2023 and then into early 2024, they were basically spiking interest rates up continuously. And now today, it is now officially coming back down again, which is the really, really great news, or the promising news, because again, we haven't solved inflation yet, but it certainly looks promising at this time period compared to what was the case at least 2 years ago. So that's the really, really more promising news, like just mentioned. So what exactly is the significance to everything that I just mentioned is that what it really, really shows you right now at this current time period is that in the fight to try to solve inflation, what's going on is that they've actually lost a lot of confidence. They're doing better than what was the case back back 2 years ago when they started. So there is, improvement that's been shown, but they are losing confidence about whether or not they can successfully now pull through by the very, very end of it, and so that's really the biggest takeaway behind the recent FOMC FOMC meeting. That is the reason why now, instead of doing the 4 rate cuts, they have now reduced it further into now only doing 2 rate cuts instead in 2025. Now, how is this going to impact a lot of other areas of our lives? Well, we can start by talking a little bit about the stock market. So when they made that particular announcement the day of, what it really did is that it led stocks to crash very, very dramatically. And this is really, really important. And the reason why this is important is that because stocks react negatively to moments of uncertainty. This is just kind of a general trend. We saw this what happened during the pandemic, when they made announcements that we were going to go into lockdown. There was a lot of uncertainty about what was going to come about in the future, and so as a result, stocks crashed. And so what this is really going to mean and how this is going to impact the stock market is that in the immediate future, because of a lot of these moments of uncertainty, it's going to crash the stock market, which is what it did. However, because at the very, very end of the day, it's important to understand is that the stock market sort of works inversely to interest rates. When interest rates go up, stocks go down. When interest rates go down, stocks go up. So because they are going to be cutting interest rates at the end of the day, it is projected that in 2025, stocks will very likely move up. But because they may not be cutting rates as drastically anymore, it does mean, however, that stocks, while they will move up more likely, again, assuming everything actually pulls through, it may not move up as much as it was originally anticipated. In other words, it's still going to go up, but it's just going to go up slower than what they originally were going to anticipate and expect. So that's probably the biggest thing to really take away about its impact to the stock market. Now, when it comes to talking maybe a little bit about the housing market, the downside to this is that if you are someone that was looking to potentially buy a new home in the near future, it does mean that one of the downsides is that the interest rates are going to stay higher for a little bit longer of a period of time. So this does mean that if you were trying to get a mortgage on a very low interest rate, it does mean that interest rates are going to stay relatively high, at least for this period of time right now at this time. So that's really the biggest idea about housing. The housing idea really is that whether or not it's a good time or not a good time to buy a home probably actually depends a lot more about your location and your financial situation. But at this current time period, expect mortgage rates to still be relatively high and not as low as we would want it to be, at least when it comes to people, for people that are looking to potentially buy a new home in the near future. And that's probably the big thing. Now, the crypto market is going to be a little bit more interesting. The crypto market, the idea really is that it moves a little bit like the stock market in the sense about how it rotates when it comes to relative to the interest rate situation. However, crypto is a little bit of an exception because it is anticipated that Donald Trump is going to be making a lot of plans to support Bitcoin, because he is, at the very end of the day, very, very pro Bitcoin. If he pulls through with a lot of his plans, it is expected that Bitcoin may skyrocket even further than it already has this year. I believe currently at the time in the making of this video, its high is just slightly over 100K, and it's expected to go up even further into 2025 if incoming President Donald Trump really does carry through with a lot of his plans. And that's the big thing. Now, for the rest of this video, what I really want to talk about is maybe talking about Trump's impact and what this means for Trump's presidency. So it does mean at this current time period, there's a lot of things that obviously President Trump has to work on. He has to help try to solve inflation. This isn't a one man's job. He does have to work with other teams such as like the Federal Reserve. He will at some point obviously have to work with Jerome Powell. So there's a lot of people that come into play about what he ultimately ends up deciding. However, one of the biggest things I think is really important to mention is that a lot of the plans that he has right now, and probably the most famous plan that a lot of channels and news articles and places have been talking about, is going to revolve around Trump's tariffs. We did make a video recently talking about Trump's tariffs, which I highly recommend watching through. Maybe at the end of this video, I'll put a link to a button or something like that so you can watch and click it to watch that video at the end screen after you watch this video. But the idea is that many of President Donald Trump's plans, they're actually inflationary plans, meaning that they're actually intended to potentially actually spike inflation even further. So we're kind of at a very, very huge moment of uncertainty right now, because we don't know how Donald Trump, if he really does implement his tariffs, how it's going to impact the economy, when there are things that are meant to actually now drive up inflation back again, but there are also plans that are meant to drive down inflation. The idea really is to try to find the perfect balance between the two, but what that balance is, that's just one of those things that they really have to see what they end up doing next year, depending on how all the numbers come together. Of course, right now it's a little bit early or difficult to call because he's not even physically in the White House yet, and we are still waiting for a lot of data to come out in the near future, in the coming months. But of course, all of this stuff, we just have to see what ends up unfolding. So with that being said, that's really what I wanted to cover in today's video. So if you guys enjoyed that, thank you guys so much for watching through to the end. Like, comment, subscribe, and hope to see you guys next time. Thank you guys so much again.